Hi guys, Paul Seals here from Conscious Investor Network. I have a special guest, Peter Hobson from Private Vaults and Gold Bullion Australia. Hi Peter, how are you going?
Hi Paul, thanks for having us on.
It's my pleasure. Can you give us a little bit of context and background, or we'll just start it? We've got this slide here for cognitive dissonance, and there seems to be plenty of that around at the moment. So say a bit more about that.
It's just an issue where people can't hold two opposing thoughts simultaneously in their mind. So they'll always defer to the most comfortable or most familiar. And that probably is where the issue lies, because a lot of folks don't realize where we are and what's coming and what's happening. Just got a little clip here that may kind of put that in perspective, that we can go a little further if you like.
Look at these people wandering around with absolutely no idea what's about to happen. Right?
So that's a clip out of the movie Margin Call. If you haven't seen it, it's great. It's about the 2008 housing bubble that collapsed. And it's kind of puts in context perhaps where we are, but we're far beyond that path now. So probably best description for us for Private Vaults of Gold Bullion Australia. We're in the old Commonwealth Bank in Redcliffe up in Brisbane, and it was built as the holding facility for all Commonwealth banks, North Brisbane and the Sunshine Coast. That's the reason geographically we are where we are. The building's amazing. We have 3 vaults on site. And we're also Gold Bullion Australia. We're the 3rd largest bullion merchant in the country. We're the largest in Queensland. We've got offices in Melbourne, Sydney, Gold Coast. We're the Brisbane office. And out of Singapore, we're a wholesale bullion merchant. And so we offer a whole range of services to helping people with, dare I say, the forthcoming disaster. And I suppose one of the best things to look for in the disaster, as I see what's coming, is, sorry, man, off on 1,000 tangents, is just where we are at the GDP to debt ratio. And this is America, but Australia's just following suit. We're just winding up. We've expanded our money supply by 80% in the last 2 years. So we're no different to the States and where we're headed. So there's a real, I think, a crisis arising, a crisis coming. So questions from you, is there anything specifically you'd like to cover for your clients, or do you want me to just ramble on? Probably the easiest way of saying.
Well, I'll sort of jump in from here and there, but, you know, really the questions that normally come up for clients always is like, you know, how much precious metals do I buy? How much do I invest in my portfolio? What percentage of gold or silver ratio do I purchase? And I guess part of like what you're alluding to, which I'm also on the same path and agreement, that it's not a matter of if, it's a matter of when. But, you know, people are going, you know, I think this is the balance, as well as having people be educated and informed, but without going into fear around it. Because as we were saying earlier, a lot of clients have a tendency to sort of panic and then rush into things. And when you make decisions from a reactive space, it doesn't tend to be the best decision. So, and clients are always asking, so when's this going to happen? Give me a month.
Look, I get asked the same question on a regular basis. I suppose the easiest answer is, look, it could be 3 o'clock Monday afternoon, or it could be 1 to 2 years away. Unlikely the latter because of how far down the track we are. But look, prepare for the worst, plan for the best, and have the best one you can in the middle, which I think we said earlier. And that's all you can do. But we're at this point with this everything bubble, and something has got to give. They can't keep printing money. There's a wonderful book, When Money Destroys Nations. It's about the Zimbabwe collapse, financial Zimbabwe, hyperinflation. And everything they said not to do, we're doing. We're doing it. It was like a guide what to do, and it's the wrong thing to do.
Well, it's interesting you should say about Zimbabwe as well, because I collected sort of fiat currencies from all over the world in my travels, and I was showing people a copy of the Zimbabwe $100 trillion note.
Crazy. Yeah. You'd never think it. And I think it's Jim Rickard's book. He runs through all of the failed currencies. So Jim Rickard's got a great look. Let's talk about fiat currency. This is a good place to start.
Yes.
So every fiat currency returns to its inherent value, which is zero. Every fiat currency has failed. Ours just hasn't failed yet. So when we came up with gold standard in 71, the world became linked to a fiat currency. So every currency throughout the world now is currently fiat. And we're just seeing the collapse of that currency right now. One of the biggest concerns, and we spoke about the bank bail-in law earlier, is a lot of folks are just either unaware of the bank bail-in law or unaware of the implications of it and how it may impact them. And so, as I say to a lot of folks, ours was passed in Australia 14th of February, Valentine's Day, a voice vote through the Senate, 2018. So we're 4 years plus in. And with that, every G20 country has a bank bail-in law, and that screams volumes of me. Once we saw that pass, that's when we realized people needed a storage option outside of the banking sector, away from the banks and the government. And that's where the storage side of what we do came about. And then it's about, well, how do we protect ourselves? But sticking with the bank bail-in law for a little bit longer, there is a run on the banks. And I can say that confidently because we see money thrown over the counter in exchange from fiat currency to bullion on a daily basis. Now, it was a drip that became a trickle, became a creek, an estuary, a river. It's not a flood. In Cyprus in 2013, they had a flood. And so the process was they shut the banks. It was about a week and a half. And then when they opened them, it didn't matter what balanced bank account you had. You could only withdraw €100 a day.
Yeah.
That went on for about a month and a half, 2 months. At the end of that, they then shut the bank.
So they called it
after you.
No, I was just going to say they shut the banks. They called it a bank holiday. Is that the term they used?
It's a wonderful term, bank holiday. Yeah. So
it sounds like visions of tropical sort of lying on a beach.
Well,
maybe for the bankers, maybe for the international bankers, but not for their customers, right?
Well, I think when there's a financial crisis going on, it's the last thing they think of. They're trying to just get past it or through it, and that's exactly what will happen. But after that month and a half, they then open the banks again, and if you had a bank account over a certain amount, you instantaneously lost 47.5% of your net worth overnight. Now, that scenario, what happened to Cyprus, gives us a couple of lessons. One is you should have an amount of money or cash outside of the banking sector. And the words I give to our own children, if it costs you $1,000 a week to live, you should have between 6 to 12 weeks cash on hand. So if there is a bail-in or a bank holiday, and when they do open the banks, if there is restriction to access to your own cash, like has happened in Canada and other countries, the last thing you want to be doing is lining up like they did in Cyprus, miles and miles of angry people with trying to get €100 out a day. You don't want to be exposed to that. But by just having access to cash outside of the banking sector. Now, the last thing you should do is whack it under the mattress. If your house burns down, you've lost your asset. Never risk your principal investment. But it's having it held safely somewhere so that you're not exposed to no cash. The ATMs will run dry. Now, that's one lesson to make bail. And the other lesson is what happened in Cyprus. The number they used was €100,000 and above. Now, the government doesn't want every man, woman, and child in the street with a pitchfork and a torch baying for someone's blood. So what they're going to do is they're going to pick a number that excludes the majority, gets the minority, but it's sufficient to clear their debt. See, wealth is not lost. It's always transferred. And it will either transfer from you or to you, depending which side of the equation you're prepared or set up for. And that's one thing we'll go into with bullion a little bit later. So imagine the average person with 5,000 in their bank account, someone's got 100,000, they lose half of it. You're not going to run into the street and defend their rights. They've still got 10 times what you've got. So that's that divide and conquer, which is what's going to take place. Just know that. So there's another scenario, don't have too much in a bank account. Now, what's that number you can safely have? I don't know. Until it's acted, we don't know. We know many Australians, the average Australian will retire with 42,000 in their super, and that's an individual, and then they'll have some other assets. So we're thinking, could it go as low as 50,000? Could it be 80,000, 100,000 like in Cyprus? Could it be 150,000? We don't know. Could it go down as low as 20? Until we know how bad that collapse is and how much funds they need to clear their debt, they'll take it from you and give it to the bank, which will then give it to the central banks. In the end, it's going to go to the central banks to clear the debts. So you just don't want to be exposed greater than what you need to. And that's where a lot of folks are converting from fiat to bullion. And that's the other side of the equation, which I can talk a bit further on as you said, what to buy, when to buy, how to buy it. And maybe there's the next step to move into, if you like, just talk about bullion a bit.
Yeah, well, just in relation to the bail-in laws and that sort of thing as well, I have covered off on some of that previously, but some of the newer clients mightn't be necessarily aware of that. And people have said to me, oh, there's meant to be government guarantees in place for 250,000. But I did say that legislation or whatever you want to call it has been revised. And if you read it in the fine terms, it also says, and any other instruments, which also includes retail banking. So, technically, they would have the ability to enact the bail-in laws, and the 250K guarantee is not guaranteed.
From my reading, and please, I know it's still up on the internet, but from 2016, it ceased to be, and it was superseded by the bank bail-in law. I don't believe the 250 guarantee exists. Even if it does, let me go through a couple of scenarios. All right, it's legislation. So at the stroke of a pen, 250,000 become 25,000, become $25 at the stroke of a pen. What you've got to remember for that FCS, there was a cap per ADI, per approved depositor institution. So any approved deposit institution, the cap was 20 billion. So for example, during the GFC, NAB had about 480 billion under their control. Can you tell me how 20 billion will cover 480? The answer is cents on the dollar. You're never going to get it. Now that was then. Now, I think NAB's holdings are over $800 billion because of where we are with this everything bubble. So the drama is that FCS is just redundant regardless. It can be cut, killed, destroyed, removed in a heartbeat. And my understanding is the bank bail-in supersedes that. Just every G20 country has a bail-in law. That's not by chance.
Yes.
That's the big one for me. That's the one that worries me, that it will be enacted. And look, we can see the writing on the wall. Velocity of money slowing, debt to GDP's through the roof. We're at the everything bubble. It's just, it's not a pretty place. And here's the big one.
No.
So inflation's going crazy everywhere, worldwide. Sorry, you're about to say something, Paul.
No, I was just saying about, like, looking at the price of fuel, and it's already being reported in Australia. People are being refused to withdraw their cash in their savings accounts, even from some of the banks like Bankwest, etc. at the moment.
I can guarantee that it's true and correct, because a lot of our clients are trying to, as I said, move cash out. A lot of people like to buy bullion with cash. That may be a great segue into the bullion side of things. With bullion, $0 to $5,000 is seen as a cash sale. We don't care how you pay for it. We just write it as a cash sale. So it can be credit card, be a BSB transfer, or cash. We don't mind. Once it's above 5, between 5 and 10, we legally must take identification for the individual or entity buying the bullion. It's not reported, but it is on file. So it could always be given to the government at some stage if they want. And then anything above 10K is automatically tracked. As we know, every transaction over 10 is traced in Australia. I personally don't have a problem with that. Most of my transactions are above 10. Pay your taxes, do the right thing, you'll never have an issue. And the government can't steal from their residents. We can dispute that one later. But if they did, every multinational would leave the country in a heartbeat if they start stealing. They'll remunerate, they won't take. And then they'll ask for it to be handed in, and you should be remunerated at what the current rate is. But the last thing you want to do is get their fiat currency. You do not want their dollars. It's worthless. They just create them there anyway. It's counterfeiting, technically, for want of a better word. Criminal activity, there you go. All right.
So this is so just we're looking at with this chart here, Peter. So, we're also sort of saying, and whether people talking cryptocurrency or precious metals, is it the fact that the precious metals are going up? And I know what's happening with inflation and fuel prices and cost of living and everything at the moment, but I'd say to people, is it the value of the precious metal that's going up, or is it the inflation or the devaluation of the dollar that we're actually experiencing?
The latter, the devaluation, fiat currency. It's a commodity that can't be created. The supply of gold increases about 1 to 1.5% per year worldwide with all the mining. Most of it's being hoarded, you're going to love this, into India, China, and Russia. And I can go into there's a couple of pundits I follow, and one's Rafi Farber. Rafi, great little Jewish guy. He's a great researcher. And he came out quite a few weeks ago stating that it looks like Russia may go to a gold-backed currency. And then he's hypothesized, in fact, bear with me, rather than hypothesizing, let's have a quick look. So Rafi was saying, because what they did, they initially offered 5,000 ruble per gram of gold in exchange. At that time, the ruble was about 120 to the US dollar as a ratio. And since then, the ruble has come back to today to 75 to 1. And when you look at Rafi's little table, at 75 to 1, gold's currently being bought at 2,073 an ounce based on the price of the ruble. Because they're all in Russia, they don't care. They're giving you the 5,000 ruble per gram price up to the 30th of June. So what there is now, there's an arbitrage between Russia and the rest of the world, where you can buy gold from the London Metal Exchange or from the COMEX, dump it into Russia and make around 7.2% on your transaction and pick it up at a price. And for the Russians, you're getting 2,073. What they're getting is gold. So there's now going to be an inflow of gold more into Russia. And the higher the ruble goes, it could be very interesting, because if you look where they were down around, up around here. They spiked against the US dollar. They're back to 75. If they come any lower, that arbitrage rate becomes larger. So could Russia technically, once all the gold cuts flowing into Russia, start to back their currency with a gold standard? Sure. That would just collapse the Western economies in a heartbeat. By the way, this is goldmoney.com and Rafi Faber, F-A-R-B-E-R. Rafi's a great guy. He's got a YouTube channel. I subscribe to him. So I'm always watching some other factors going on. I mean, Putin's playing this like a chess player. He's been extremely strategic in what he's done now.
Yeah.
So it's quite phenomenal where we're headed.
And having said that as well, what we started the conversation with around about, people sort of, perhaps going into fear around it, or like, I certainly think the next 6 months are going to be very interesting geopolitically. But I remind people as well, there's two things. One, that Klaus Schwab says it'll happen very, very slowly, then it'll happen very, very quickly. And also the fact that, the Great Depression didn't fall off a cliff all of a sudden. It happened 1929 to 1933, and then tailed all the way to 1939 over the decade.
Agreed, absolutely. Because initially there was about a 50% decline in the stock market. It then clawed itself up 30%, and then the next 2.5 years it fell to its 95% complete failure. So it was a slow trundle down. Everyone's been taught to buy on the dip. And if you look at all of the great issues we've had, 2000, 2008, 2020, everyone's been educated to buy on the dip. We've had this beautiful 30 years of growth and protection by the Fed and other central banks printing money and protecting us. But it's got to fail. Coming back to that screen I had before, which is the, for want of a better word, the everything bubble. Here's where we are now. It's just...
So say a bit more about what is the everything bubble? You mean everything is bubbled? Property, real estate?
Real estate, shares, equity.
Yeah.
And the GFC...
derivatives.
Everything. There's $300 trillion of debt around the world, of which I think 100 or 200 trillion is in derivatives. It's a massive number. Yeah. Things have to reset. I mean, I'm not on Klaus Schwab's group saying we got to have a reset, but we have to have a financial reset. This can't continue. And so a lot of folks are saying we have to go back to sound money principle. And I just gave an example of Russia, perhaps maybe even China backing their currency by gold, or creating gold as an alternate currency, which is neutral compared to all currencies around the world. Back when they did Bretton Woods, they were looking at the band call being the neutral currency, but it eventuated, and we went to America, and that's what's enabled this whole Ponzi scheme of growth upon growth upon growth, derivative to be out there. So
I used to track a lot of the information by Lyndon LaRouche about the Bretton Woods Agreement, that sort of thing. He was a huge advocate for that as well, until he sadly passed on a couple of years ago. But I mean, just can you fill us in about like what we're looking at this chart here, and then also further to that, the comment, with other documentaries, and including movies like you mentioned, like even like The Big Short and that sort of thing as well. And even Mike Maloney in his reference in education as well, talking about kicking the can down the road in relation to the GFC and what we experienced before with the bailout laws, where the banks were bailed out by the governments, and then that debt was subsequently passed on to the citizens of those countries. Now they've been very sly and cunning about introducing the bank bail-in laws, which majority of people are completely oblivious to and would be up in arms about it. There would be riots in the street if people were awake to the scale of it. But what I'm saying to clients as well, what we're potentially going to experience will be like 10x in relation to what we experienced as far as what was known as the GFC in 2009.
Agreed.
Yeah.
Agreed completely. Look, you've nailed it and you're right. And you're giving your folks the right information. Until it happens, we don't know how bad it's going to be. But if you understand 30 years of growth, I'm an old person, so I grew up when there was cycles, booms and busts.
Just older, Peter. No such thing as older, just old. Just old, just older.
Yeah, well, what do they say? Growing old's mandatory, growing up's optional. So I'll take the optional option, okay? But look, we had booms and busts, and that was the cycle correcting itself, and companies that were not viable weren't supported. We have so many zombie companies floating around today. You look at the share market, you look at the share price PE ratio. There you go. This is what I'm trying to get at. Dividend yield ratio. You look at the Warren Buffett indicator. They're off the chart.
So PE is profit to earnings ratio.
Correct. And then you've got dividend yield ratio. So the dividends being paid compared to the share price itself, or the Warren Buffett indicator. It just shows that things are just so overvalued. Something's got to give. Now, they'll keep printing trillions and trillions of dollars. It was billions. It's just getting larger and larger. There's a point that once people start to lose confidence in what's going on, and this scheme called the financial monetary system, that's when it's all going to fail. And it's close. More and more people are becoming aware and awake of what's going on.
Well, I guess the question that I get from clients as well, and I guess this is your opinion, or I should preface this by saying it's not financial advice.
Correct.
We're providing information for people's education so they can be empowered to make choices for themselves. But and I have spent time, I've been fortunate to travel overseas in a lot of countries, including places like Germany. Like I said, I was very interested in different currencies. And I also collected currencies from the Weimar Republic. And there's famous stories about that as well, where people would take a wheelbarrow load of money down to buy a loaf of bread. And then by the time they got to their place in the queue, the price of bread went up. They went back to get some more money. And then people had tipped the wheelbarrow out of the money, tipped the money out of the wheelbarrow and pinched the wheelbarrow.
Because it had more value than the money that was in it. I don't know if you've seen the video in Venezuela where there's piles of money in the street. Same thing in Venezuela at the moment. Maybe that's, again, a good segue point to look at asset classes to invest in. I was always taught 30, 30, 30, 10. That was back in the 80s. And 30% property, 30% equities, being shares, bonds, derivatives, ETFs, CFDs, 30% cash or opportunity money. A lot of people have never heard that word. Having access to cash is a great opportunity, because if something comes up of value, you can jump on it. And I've done that. People go, how'd you do that? And I go, my opportunity money. Oh, what's that? And then the last one was 10% bullion. Okay. Now, since 2008, since the GFC, when we should have had the correction that never occurred because we printed out with QE, quantitative easing, the new recommendations, again, it's not financial advice, but just pundits around are recommending these numbers around 25, 25, 25, 25. So 25% property, 25% equities, 25% cash, 25% bullion. Now, the issue with property, we know it's overvalued. We know that the equities are overvalued. The issue with cash is you've got the bank bail-in law. So where do you keep your cash? Other than under your mattress or a safe deposit box, you really don't have a lot of options. But
no. Well, this is the thing. Sorry, I was just going to interject there as well, Peter. Please forgive me. But just in relation to that as well, I have a lot of clients that sort of say that they're going to go, oh, we'll just put it cash under the mattress. But that's apart from theft, there needs, if in the event that there's an event typically like, and again, referencing the World Economic Forum, and Cyber Polygon, if there's like a hacking event, or there will be some sort of event that is the catalyst for introduction of digital centralized fiat currencies. Yeah. And you know, they just go, well, you know, like you said, if it happens next Monday, and then all of a sudden they say, well, sorry, this dollar doesn't have any value anymore, we're reverting to, which is already in place, mind you, as far as the information that we have with the Reserve Bank. They've been using digital currencies, centralized currencies in the back end for a long time. And they go, well, sorry, you know, we've been hacked. We're progressing to this digital currency, and that cash is really, you know, there might be an amnesty period or something or other, and then it's not actually current anymore.
Agreed. We do not want a CBDC because we're replacing one Ponzi scheme with another Ponzi scheme. We're back in the same boat that we're already in, and it allows the government control or the central bankers control of what we do. But the worst part about it, if you live in District 12 and you want to go to District 13 and they don't want you there, your money will not work. You might like a few beers and you buy a few beers one week, and as far as they determine you've had too many beers for that week, you won't be able to buy any more beer. Yeah,
or you didn't pay your traffic fine, Peter, so there's no beer for you for this month.
Or no access to your funds and you can't go grocery shopping. It's just horrendous. And if you don't spend your money fast enough because they want to have that turnover of money, they'll start to take it off you. It is total control. Now,
well, it's interesting because I've had reference clients with it previously where even openly in the media, I think the head of the ASIC at the time was David Medcraft, and he openly acknowledged that digital fiat centralized currencies will have the ability to be tracked, traceable, confiscatable, and taxable in real time.
Yep, absolutely.
Yeah.
So you don't want it. We want to go back to a sound money principle. We want to go something backed by something. Now that's something, and the crypto people will scream that it's got to be crypto, but ultimately gold stood the test of time, 5,000 years. And maybe if I pop to another screen that might guide you on.
Well, I was going to say while you're mentioning about crypto, a lot of the cryptos are actually centralized as well, and people don't realize it.
They are. If you're on exchange or you're doing anything digital, it's all tracked. You're kidding yourself if you think it's not tracked. So the last charts I've been using came out of In Gold We Trust. I've got to plug those guys. In Gold We Trust do an amazing, they do the premier report on a yearly basis. It's going to come out in May. Some of the charts I was just showing is their preemptive chart book that they released before they released their actual book. It's around 400, 500 pages. And it's covers cryptos, gold, silver, all the precious metals, but also the political and geopolitical issues. So it'll come out around May. In Gold We Trust. You just do a Google search, or you may want to drop the link in the video after this, which is phenomenal.
Right.
This is from George Gammon. I picked it up from a video. And if you've never heard of George Gammon, he's put some good videos out. But this is where we are. We're about the beginning of a super commodity cycle. And we are so low. If you look at the gold Dow ratio, there was a point where 1 ounce of gold would buy 1 Dow share. We've gone so far away from that, it's phenomenal. So what's going to happen is we're going to hit this super cycle, and you'll find the gold to Dow ratio will tighten way back up again. And that's what this graph's representing, just some of the previous Great Depressions and where the commodity super cycle starts. So you can see the Long Depression, the Great Depression. So we're currently, let's call it recession rather than depression, but a lot of folks are wearing rose-colored glasses, think everything's rosy, but it's anything but. We're close to the precipice.
Well, they say sometimes ignorance is bliss, but you don't want to be caught on the wrong side of that either.
No, and that's where you get back to looking at gold as an asset class. Stood the test of time. It's physical, it's real. It can't be, if you don't touch it, you don't own it. I wouldn't do an ETF in bullion at all unless you physically have some control. Then you've got storage issues, but you know what? Put a percentage of your wealth into physical holding is a great recommendation. Then it's a matter of, and the three things are, well, how much do you want to put into it? You can go up to 25% without being over allocated one asset class. But do you have to do that? Well, it's up to you. You put 5% in. It's just 5% was got to be better than nothing. So it's going to be some protection. I suppose my role as a bullion merchant is to see people move in and out of bullion at times of stress. At the moment, it's a high percentage. And when we go past this quagmire and that transfer of wealth occurs, you can go back to 5 or 10% down the track. It's just being aware of how to rebalance and reweight your portfolio as time goes on. So getting back to the bullion buying, number one, how much you want to spend. Number two, gold, silver, platinum. Gold's by far the safest monetary metal. You will make more money from silver and platinum than you will gold. I'll tell you that straight away. And the reason is the ratios are off the chart.
Yeah.
And the older you are, the more I say you should have more gold than silver and platinum. And the younger you are, you can be a little more risky and go for more silver and platinum. I mean, in the ground, there's 8-to-1, silver to gold. Above the ground, we're trading around 80-to-1. It's why? There's no reason for it. So that ratio brings itself from the 80 down to 60-to-1, down to 41, 20-to-1, or traditionally where it used to sit there, 8 to 15-to-1. That's where you're going to make more money from your silver than you will your gold. It used to take 2.5 ounces or 2.4 ounces of gold to buy platinum. Now, platinum's 30 times more rare than gold. The rarity doesn't give it value, its uses do. But currently, it now takes 2 ounces of platinum to buy 1 ounce of gold. It's the most unloved metal, yet the properties and principles that it has as a commodity, as jewelry, as just something that can be used, particularly in the new green energy, being hydrogen cell energy, which is going to far surpass wind and solar. Platinum's got such a way to go, but it may be a 2 to 5 year delay. It may not be straight away. So hence, the older you are, more gold safer for you, but the younger you are, you can ride that through and get the better or longer benefits from silver and platinum. So someone says, well, what should I buy? Well, I can't tell anyone what to do. Some people will go 50% gold, 30% silver, 20% platinum. Others will go a third. Others will just, no, just give me gold, or just give me silver, or just give me platinum. Do be aware of silver, the volume, 80-to-1. So 80 ounces, an ounce of gold buys 80 ounces of silver. The storage is much dearer for your silver because it's just that much more volume.
The volume.
Yeah. And look, after you.
I was just going to say, and then, so apart from the question about, people new moving into that space about what I should buy percentage-wise in relation to precious metals, and then the next thing is also in relation to sizes, because like I said, I've been in and out of the market for the last 15 years and traded in and out, and I know you definitely get a better spot price buying larger volumes like 5 and 15 kilo bars and that sort of thing, but there seems to be less of a market for the larger the size, or less buyers for the larger volume.
This is when you deal with different bullion merchants. As we're the third largest, we don't care. As long as it weighs properly, tests the purity correctly, and is stamped and marked appropriately, we'll buy it. So there is no issue moving big ugly bars through us. Smaller bullion merchants, yes, they're looking for an exit strategy when they're going to take something on. As we're a wholesale bullion merchant worldwide from Singapore, we don't mind. We'll just grab it, smelt it down, and recycle it into the size or denomination that individuals are after, 1 kilo, 5 kilos. So as far as gold bullion Australia goes, we don't care the size. Bring it in. As long as it tests, weighs, and stamped appropriately, we'll take it. And that's the joy of dealing with larger bullion merchant. The small ones, if everyone's selling at the same time, they're going to run out of cash. They're not going to be in a position, if they don't have their exit with their metals, they've got to get rid of their metals to cash up to buy your metal back. Look, we may be dealing goats, pigs, and chickens down the track. That may be the currency of the day. Watch out.
Yeah. Blankets, beads, and mirrors, Peter.
Yes. Don't rule that out either. Or picks and shovels that wasn't the gold mining era. You know? It's just whatever the commodity of the day is or the necessity is. Food will be one of them. Fuel will be another one.
Yeah. So in this chart here, we're sort of looking at what do we got heading towards, they're talking about the current depression. It's interesting that they're branding it depression. Politicians would probably call it a recession.
Yeah.
But yeah, I mean, particularly in Australia, I've been saying to people as well, look, we haven't really seen the economic impacts of what we've been dealing with as far as this COVID pandemic's concerned. And now we're dealing with on the east coast of Australia with all the flooding and that sort of thing. So I think the flow-on effect, particularly in the next 6 months, but as we're heading towards 2025, is going to prove to be very interesting and very certainly challenging for those that are unprepared.
Which are majority. I mean, expression I like to use, there's a thin veneer of civilization over this raging animal called humanity. I don't know who I stole that one from, but it's a gem.
That's great.
If you have any doubt what I just said, go to the shops, I'm talking Coles and Woolies, the day before Christmas, when they used to always shut on Christmas Day. They'd almost be breaking out in fights. Look at toilet paper, the great toilet paper issue of 2020, you know. So look, there's this thin veneer, and the last thing you want to do is to be exposed at home. With that, people are going to want to feed their family, take care of their own, and they don't care what they do to get it. And that could be you in front of them. So robberies, break and enters, home invasions, it's all on the table. We've got to prepare for the worst of humanity so we can get to the other side of it where things will sell. And it sounds horrible to be Chicken Little, the sky's falling, but prepare for the worst, plan for the best, and just have the best life you can in the middle. Don't live in fear. That's the worst thing. Our government, our media have been trying to do that for the last 2 years.
Yeah. And can we talk storage as well? Because, you know, clients over the years have been doing different things, including having their own safe. You know, I've had clients that have built safes into the concrete foundations of their property that's getting created. I always say to clients, the best form of security is privacy. And then other people have done other things, including, you know, buried it on their property and all sorts of stuff. You know what I mean? So say a little bit more about storage if you can, because and then I think the next conversation that comes up for people around storage is the concern about what's happened previously, where people have had safe deposit boxes in banks and that sort of thing. And then if that bank has closed historically, they shut the doors, and then everything that's within those vaults has become the bank's or the liquidators in that instance's possessions.
Yeah, which is a great thing. So let's start with the safes. I don't believe having a safe at home makes you safe. Anyone can open your safe as fast as you can. They'll just bang you on the head until you open it. They'll threaten you with your life, someone you love and care for. And that's how they can open it as fast as you can. I used to keep a lot of stuff at home, and I have quite a secure premises. And the best thing I did was get it away from home, and I used to leave the safe door open. Safe door's shut now because it's full of ammo, but that's another story. So it's just, you're not safe having a safe at home. So the rules of bullion buying: rule number 1, don't tell anyone. Rule number 2, don't tell anyone. Rule number 3, stick it somewhere safe where you can insure it. And that's what you want to do. Now, I'm going to come to the comment you mentioned about the bank's closure and
yes, please.
Asset. All right. Our underwriter is Lloyds of London. That's the only person you want to be as an insurer for facilities such as this. So we have to tick certain boxes. We can't store people's items without meeting certain security arrangements. We have regular security audits to ensure that we constantly tick and meet and surpass those requirements. So step 1. Step 2, retention of title of security, ownership of goods. In our contractual agreement, we sign your rights or your goods to you. You are the owner. Our entity's role is to protect you from everything and everyone, including our entity. So anything would happen to our entity, not like the example you cited, someone would come in and run the business. Legally, they can't touch the goods, and physically, the client's the only key holder with access to the goods. We can't physically access them, and legally we can't go near them. So we've designed the premises to be the most secure that we can to protect the clients from everything and everyone, including our entity, if that makes sense. So we would always trade with the client's access to their goods. No one can go near it. Plus, we're monitored 24/7. If we go towards a box in an unseen or untoward way without the monitoring company being aware, we're reported. So it's designed to cover the client as much as we can.
Yeah.
Plus, being part of the GBA group with a 40-year history, you know, we don't want to jeopardize anything we're doing also.
I see that you're offering clients their private vault access for 2 months.
Yeah, 2 months just to try, see if you like. Just get 2 months with your first 12 months, whatever works.
Okay. And between what hours is availability for access? Do people need to make an appointment to get access?
You can just roll up, but some of the appointment will always take priority. So our hours are Monday to Friday, 9 to 5. We do have currently open late on a Monday at 1 o'clock. So it's just when we're present. It's a 2-key process. So you can't access without a staff member present to assist you. Confidentiality is always assured. Plausible deniability, we always leave. We don't want to know what the client's doing. And there is 3 no-nos with facilities such as ours. One is contraband or illegal substances. The next one is perishables, liquids or explosives. As I jokingly say, no body parts, okay? And lastly, firearms. We're only ones who get to have the firearms, so no. So outside of that, knock yourself out. It's a great, look, once you've had a safe deposit box and you get the benefits from it, we've got a wonderful little checklist that we can leave with you as a link for your clients. Two ones that really stand out for me are original documents. We have a lot of clients from overseas with, say, international birth certificates. For them to get another one, nigh impossible. So the easiest thing to do is get your original document, photocopy it, get half a dozen copies, get them certified by a JP or a solicitor, put your original document away, you'll never touch it again. We have a lot of ladies with jewelry just sitting around the house they don't wear, maybe family heirlooms be passed on. Get them off your insurance policy, dump in the box and save some of your insurance policy and put it towards the cost of a safe deposit box, which starts at a princely $270 a year with 20,000 complimentary insurance. It's kind of chump change. So it's affordable.
So can I ask you, can I just dig in a little bit more and just ask you about the insurance as well? So that's great for people's peace of mind. How do you quantify, someone says, oh, they had $100,000 worth of, or $500,000 worth of precious metals in there. And how do you quantify that as far as insurance cover, et cetera, is concerned?
When you buy something, you can get a receipt. It's as simple as that. You've got a trail. You've got your paper trail. As far as insurance goes, because of the type of facility we are, 20,000 we provide complimentary. As I said, that does the normal homeowner. Beyond that, you can insure up to $1 million without any disclosure to us. We don't require it because of the type of facility it is. But then if there's a claim made, you're hit by a meteor, a tsunami, it's then between you and the insurer to validate your items. And we all bought and paid for items will have a record. So always have that record to validate. That's all they have to do. Once we go over $1 million with insurance, the insurer does require some documentation for what the item is, just to validate what they're insuring beyond that $1 million mark.
Okay, that's good. And I'm looking forward to getting in at some point in the next month or so to come and see you, and maybe we'll do a tour and shoot a video of your facility there if we have your permission for that as well.
At the front of house, yes. Back of house,
yeah,
no.
Front of house, sure.
Yeah, we can't. We don't. I mean, that photo we have up there is about the only one we release at back of house, just for security reasons. We don't bandy around photos on the web and how we're doing.
Of course.
Yep. I just mentioned gold and silver. So Gold Bullion Australia. So from our homepage, you just click buy bullion. It just takes you straight to the charts and prices page. I like the chart. You can manipulate it quickly. I like looking at the last 3 months, just me. You look at silver, and again for the last 3 months, and you just get a feel whether the price is high or low over the last 3 months. And platinum is the most unloved creature at the moment. I love buying things people don't want, and when everyone wants it and they can't get it, that's when I love selling it. That's kind of the quickest way you're going to pick the peaks and the troughs. No one's going to pick the top or the bottom. So when everyone's talking about it, everyone wants it, no one can get it, that's the time to sell it, and no one loves it. Platinum's the great one, I believe, at the moment. As I said, the ratio is way off the chart. Platinum's way undervalued. I can go into ratios at another stage if you want.
I'm just curious there as well, with the 3 month chart that we're just on the previous screen for, where there's obviously been a spike there. What was the contributing factor? I think we're in a 3 month. And that one, just that one, that last one.
Yeah, gold 3 months.
Yeah. So we've got a spike there. What was contributing factors to that as far as what was happening geopolitically?
That was virtually the beginning of the Russian invasion. There was a big run up. Now, a lot of people say when it's geopolitical, there'll be a spike in gold, then it'll drop off. When it's monetary, that's when it won't be a spike. It'll just keep going up. So a lot of people, unfortunately, are unaware geopolitically. There was always going to be a spike associated with that. And then when the fear and trepidation dies down, that's when we see the pullback on the price. When it's a monetary problem, that's when it's not a spike. It'll just keep going up. Some of the pundits are saying we'll see $1,000 week in gold. That's $1,000 US, which is 1,500 Aussie. So it will be interesting. What you've got to remember with gold, the current gold price, if it ever refreshes, we're sitting, sorry, quick refresh. We're sitting at the 2011 highs. So what was resistance has now become support. So we're sitting around this 1920 mark. It was tested the other week and bounced back up massively in a very quick bounce back. So we're seeing a lot of resistance for it dropping below the 1920, 1910 mark, and that's US dollars.
So CFDs are contracts for difference. Why is there such a disparity between the CFD price and the actual spot price?
No, there's not. CFDs
1924.
Yeah, that's the US dollar rate, 1924 US dollar. So
gotcha.
We're in the gold US dollar.
That's
and in the Aussie,
CFDs on gold. Oh, okay, gotcha.
We don't even, sorry, don't even look at. We're a physical metal merchant. As I said, you don't hold it, you can't touch it, you don't own it. So
exactly.
We only deal in physical. The interesting thing is when the Aussie dollar goes up, and we're currently up around 75 US, the price of gold to us as Aussies appears to go down. It doesn't change. It's just our dollars becoming stronger against the US dollar. I believe we may get up to 80 at some point. My daughter deals in foreign currency, and there's a bit of a prediction that it's going to go up to 80 cents, the Aussie to the US dollar, which will make your gold cheaper. It's just, it's getting tighter in the gold market, the physical market. So it's starting, we're seeing more virgin bullion buyers I've ever seen. So there's more people coming in the market that have never been there before. I do have a little 3-page document we put together just to help people with resources, ideas, just what to buy. So if you like, I can give you that and you can dump it up as a link.
That'd be great, Peter. Thank you.
And maybe just I'll give you some of the resources. In fact, in that three-page document, the last page is just resources, just links you can go to and just different pundits or different groups. Kitco is one of the best ones, kitco.com. You get put on your phone, you can keep the spot prices live on your phone. As you see, we keep refreshing, even though the market's shut at the moment. The market will reopen on Monday morning with New Zealand when we come back online. But,
okay, and sorry, you go.
No, that was it. I was just going to mention, and Kitco's got some great pundits, you know, some of the high-end people for their news. And as do a lot of the resources, and one of the best ones for metal is that in gold we trust in May. Don't forget that. That's a great link to have on your website.
That'd be great. If you could give me those links, and I'll post them in the description of the video anyway for our clients and that sort of thing. So can you just step me through the process? Obviously, we've had just clients. It's pretty, I've done it myself. It's easy and fast to be able to register as a client. And then is there any, like, what's minimum purchase volumes? And do you guys put it, I mean, but people have to physically come into the vaults to deposit the physical into the vault?
Yeah, well, you control your safe deposit box. You physically have to put it there. We can't do that for you. So sometimes geographically, we've got clients, Darwin, Cairns, everywhere around Australia. We have internationals. And so what will happen is, if they've got a delay, like they'll purchase, know they're coming, we'll hold it for them on site under our insurance. And then as soon as they do a handover, then they'll put it away safely and securely. So with buying gold, it's really simple. If you do the register log on, do it online, how do I say it? Whatever's published is what you pay. When you're dealing with us, depending on the dollar amount you're paying, we can move a little bit and help you. So the easiest way is just a phone call. And for us, 1300 888 782. And then we can, I'm going to step back. If you're paying cash, you must physically be there in person. Got to be there. Right. It's the only way to do it. Sure. It's much easier. And I do have an issue for some folks. If you're paying cash, one, you're exposing yourself to risk lugging cash around. It's not the thing to really do. You shouldn't be running around the streets with cash in your hand. It's risk. I'm just adverse to risk. I'd rather you see do a BSB transfer. Don't expose yourself to any risk. And once the funds are cleared, come pick up your goodies. It's as simple as that, whatever the denomination dollar amount it is. You can walk out the door with it. And if I may come back to what you said earlier. Yes. Safe, don't do it. In the ground, metal detectors these days are amazing and you'll be shocked. And there's no succession plan. Remember I said, don't tell anyone, don't tell anyone. Well, you fall off planet Earth. Who's going to know where your goodies are? You don't. Yeah. And it's a loss of asset, and that's a loss of a principal, and it doesn't help your heirs. There's no succession plan. Where for us, we must have an next of kin because legally we have no right to your goods, so we got to give it to the public trustee if you don't give us next of kin. So please let us help you.
Okay, and then that's the different like purchasing, you know, so there's people purchasing in their personal name, there's people purchasing in like their self-managed super funds, and also their, you know, their asset structures and social enterprises and that sort of thing as well.
Sure.
Yeah.
Well, just depending on the entity you're buying in is the entity name we've got to put in it if over 5K. So you can buy in personal, company, trust, self-managed super. They're the four major asset or four major groups we see. And depending on opening a box will depend on the documentation for each entity. I mean, company, trust, self-managed super is tax deductible. Whereas unless you're a sole trader, you don't have that right.
Okay. There's a minimum amount for purchase for purchases?
The bullion, yeah, the smallest amount we got, a gram of gold or an ounce of silver is about it.
Right.
Doesn't matter, just walk in over the counter.
Okay.
Once you come, you'll understand. It'll make a lot more sense. And
yeah,
you know, buy a couple of pieces and then sell a couple of pieces, and then once you understand the whole process, it's like, oh, that was easy. It's look, we've been consciously removed from gold, silver, and it was consciously done by the central banks and commercial banks. 100 years ago, you could travel the world with a gold sovereign, and didn't matter where you went to, they recognized a gold sovereign.
Yeah,
stopped this. The banks have stopped this.
It's funny. I did that as a trial because I didn't want to use any cash and I didn't want to use any ATM cards when I traveled internationally to Europe. But funnily enough, I couldn't actually find many places that would actually change it without charging exorbitant rates for the exchange. You know what I mean? Yeah, for like 1 ounce, you know, 1 ounce round bullions for gold and that sort of thing. You know what I mean?
Okay.
So I found it really difficult, particularly in places like Berlin and that sort of thing, or you go to places like money changers who might also do bullion, but some of their exchange rates were very exorbitant, you know?
Then what you've got to look for is a specialized bullion dealer. I mean, our prices are published. We've got selling price, buyback price. So, you know, an ounce of gold, the spot's 2567. We charge 2628. It's about $60. The buyback is about $50 between spot. So it's spot plus when we sell to you, or spot minus when we buy back from you. It's just up to 2%.
Is that a percentage, Peter, or how does
no,
it?
It's not. It's a floating amount set by. Best way to say how was it set? All merchants like Perth Mint, ABC, ourselves, we watch each other like hawks, and we make sure we're fair and even and equitable, But it's about $60 on the buy because we have to physically get the metal, ship and insure, and have it on site. So of the $60 we make on the buy, 10 goes towards that shipping and insuring. So we make $50 on an ounce when we sell it to you, $50 when we buy it back for you for an ounce of gold. So we're not going to retire when you buy an ounce of gold.
No.
So everything's published, it's all transparent. And of course, we'll always be competitive with any other merchants. So, you know.
Sure. Okay. Well, this has been great, Peter. Anything else you want to leave us and our clients with in closing, just in summary?
I don't think people realize how bad it can be, and just be prepared. And
that was sort of part of the question that I alluded to. And that's always the question that I sort of get from clients, like, how do you see this playing out? And like I've been dealing with other bullion dealers and that sort of thing over the years. It got so busy. There was other, like in April 2020, bullion dealers were so busy, they couldn't even answer their phones for weeks. I had to go and physically sit in premises for clients and pick up their allocation. They were so busy. So it's like when it gets super funky, it'll be too late, even just as far as availability is concerned. And when it sort of spikes, a lot of people are not going to let go of their precious metals.
Probably the best way to allude to that is using 2020 as an actual example. We sold out a product. We had no physical product. But because we're a wholesale bullion merchant, we knew our supply chains, we knew what we were bringing to the country. So we knew what we could pre-sell. So it got to the point we're selling with our product on site and we guaranteed your position. Now, if you ever wanted to exit, you could exit before the goods arrived. We'll just take the goods over. So you weren't locked into it. So you could always get in or get out if you needed to. But we physically did not have stock on site. So that's where we're headed again. And I think it's Jim Rickard. I'm trying to remember the recommendation, but I'd rather be a year early than a day late, because once it's gone, it's gone, and you're going to be shocked. I did mention, $1,000 week in gold in US dollars, 1,500 Aussie. And again, that's just more a reflection of the fiat currency, not the price of gold. Gold's just holding its value against commodities or against assets where the fiat currency is declining rapidly. That's what's going to happen. So get it while you can. Don't wait until you want it. It's going to be too late.
Or more likely you need it.
Yep.
Yeah. Yeah.
It's
okay.
just,
well,
yeah.
Yeah. Sorry, you go, Peter.
Be prepared. Nothing more than just old Boy Scouts, banded pal. Be prepared. That's it.
Yeah, absolutely. Well, I'm going to try and get in and see you and make a time to come and see you and check out the vaults and that sort of thing as well, so we can get some further information on that. I do appreciate your time today. Thank you for being very generous with it. And I'll get those links from you and post it in the description. And so people can work out how to contact you easily and get prepared. Like you said, it's better to be prepared, and it's better to be a year early than a day late.
Absolutely. Hey, thanks very much for the opportunity to help others be aware of what they need to do and get themselves ready for what's coming. And those that are will be fine. And unfortunately, those that aren't, you can't even talk them into it. They're stuck with their cognitive dissonance right back to where we started.
Yeah.
Don't be a rescuer. Just do the best you can for you and yours, and give information freely. And if nobody wants it, walk on. Just don't get stuck on trying to help people who don't want to be helped.
Absolutely. Right. Peter Hobson from Private Vaults and Gold Bullion Australia. Thanks for your time.
Absolute pleasure. Thanks for reaching out. See you.